Welcome to another edition of Friar Financial's Financial Forum. On today's show, we're talking 6 weeks new peaks, the market's balancing act, and six more planning questions you can ask yourself this spring. So we'll be right back and get started with our first segment, Markets in Motion. All right, so you're probably noticing I'm flying solo this week. Jeffrey is on travel with friends. It's graduation time, so he's traveling out of state with friends. I think he's actually coming back today. On the road coming back today. So I'll fly solo this week. At any rate, let's get started with markets in motion. So 6 weeks new peaks and a market that refuses to slow down. So the market's just locked in 6 straight weeks of gains. This is the longest winning streak since 2024. Um, in that, what we're seeing is that the tech sector, tech ripped higher. Chip makers just blew the doors off of earnings with their reporting. The S&P 500 and the Nasdaq both hit new highs again. Then Friday hit, and the market got the one thing it wasn't expecting: a monster job surprise that more than doubled expectations. Now, if you add in stronger than expected new home sales, falling oil prices, and a major chipmaker deal, and suddenly this market had everything it needed to keep the rally alive. And that's before we even get into this week's lineup. So buckle up, because if last week was about momentum, this week is about whether the rally has the fuel to keep running. So we'll be right back with Finance in Focus. So again, our headline this week is the relief rally rolls into week number 6. So last week, stocks rose last week as a combination of a few things: improving geopolitical tone, strong corporate earnings, and encouraging economic data pushed these major indices higher. So the S&P 500 gained 2.33%, the Nasdaq surged another 4.51%, the Dow inched up a little bit at 0.22%, and the overseas markets also participated in the gains, up 1.24%. So now a week that started in the red but ended in records. So markets opened the week under tremendous pressure as we had the stalled peace talks and the rising Middle East tensions. All of that weighed on investor sentiment. But the mood shifted pretty quickly. So Tuesday's open flipped that script, with investors cheering on the solid Q1 earnings and some falling oil prices. Wednesday brought the tech-driven surge, as strong results from major chip makers lifted that entire sector. And that's when both the S&P 500 and the Nasdaq hit their intraday highs, with the S&P closing above 7,300 for the first time ever. And then Friday reignited that rally on the back of that surprisingly strong jobs report in April, and then that major chip maker deal that extended that semiconductor momentum, which we'll talk about that a little bit too. So that jobs report, which was a much needed surprise. So April hiring came in well above expectations. 115,000 jobs added versus the 55,000 economists projected. Leading the way were jobs in healthcare, retail, and the leisure and hospitality industry. Unemployment also held steady, which was a reassuring sign given the global uncertainty that we're facing. That gave investors the report as evidence that domestic hiring remains resilient, even as the Middle East conflict continues to create a lot of volatility in the energy markets and the global supply chains. The housing market also showed some quiet strength. New home sales data also surprised to the upside. March sales rose 7.4% to 682,000 units. February sales were revised higher, actually showing an 8.9% jump. So despite the affordability challenges, new construction continues to fill the gap left by that tight housing market. Low inventory there. Other economic factors in energy: the U.S. is considering a temporary gas tax suspension to ease the prices at the pump. The economy: U.S. consumers are unfortunately leaning more on credit as essentials rise in cost. So that's not a good thing, but that's what happens. Of course, your income is fixed, costs are rising, and that tends to spill over into having to borrow money to make it. And young Americans are increasingly pessimistic about their job prospects now. It's tough out here on these young people trying to find a job. And corporate news, big box retailers are investing heavily in store remodels despite e-commerce growth. So that's interesting. And energy prices, Midwestern states are seeing the heaviest increase in prices at the pump. And that's going to be a pressure point for voters heading into the midterms, I'm sure. This week's economic data, we've got existing home sales on Monday, retail sales, jobless claims Thursday, import prices, business inventories, Friday, industrial production, capacity utilization, and home builder confidence. And then earnings on deck this week, Monday, Constellation Energy, Wednesday is Cisco, and Thursday is Applied Materials. And that will wrap up our finance and focus section.
Retirement shouldn't feel uncertain, it should feel intentional. The difference comes down to precise planning. From Social Security and pensions to investments and tax-efficient withdrawals, every decision shapes the reliability of your income. And when taxes are managed wisely, your money simply lasts longer. At Friar Financial, our dynamic retirement income strategy brings all the pieces together so you can enjoy a retirement that's not just secure, but rewarding.
All right, everyone, welcome back. We are in the Wealth Wisdom Workshop now, and this week we are giving you 6 smart questions for your financial plan this spring. It's always good to kind of sit back and reflect. So this is pretty cool. So spring is here. We're cleaning out closets. Winter coats are kind of going back and forth. It's just been up and down weather-wise here in North Carolina this week. But it's the perfect moment to give your financial plan a little fresh look. Now, I'm not talking about tearing it down and rebuilding it from scratch, but just a little spring refreshers about re-engaging your intent, tightening up the areas that matter most to you, and making sure that the year doesn't get away from you. So today we're going to walk through about 6 questions that can spark some meaningful conversation among you and your family and set you up for a stronger, more rewarding financial year. All right. So question number 1, should I adjust my savings goals this year and did I meet last year's targets? So let's start with the engine that drives almost every financial outcome, and that's actually savings. So savings influence your retirement readiness, your investment strategy, and your ability to hit the goals that matter the most. So ask yourself, did I save what I intended to save last year? And do this year's goals need an update? This is the perfect time to revisit your 401k contributions, your automated transfers, and any savings buckets you've set up. Even a small increase, 1 or 2%, can create meaningful long-term impact. All right, question number 2. What gaps should I look for in my financial plan? So before you focus on tactics, let's zoom out a bit. Are there any missing pieces in your plan? Are there gaps in insurance, estate planning, or cash flow management? Those can quietly undermine an otherwise strong strategy. Pick one area to tighten up this year, just one. And if you're not sure where the gaps are, that's where working with a financial professional can give you an unbiased view and help you prioritize what matters the most to you. All right, question number 3. What steps can I take now to potentially reduce my taxes this year? So taxes are one of the most immediate and controllable levers in your financial life. Acting early into the year gives you more options, more time to reduce taxable gains, more time to manage income, more time to take advantage of new rules or planning opportunities. So again, this is an area where your advisor can help you with strategies that fit your situation and keep more of your money working for you. Question 4, let's see here. Are there any changes in interest rates that can impact my plan? Interest rates are always moving, and those movements can create opportunities. Maybe refinancing your mortgage makes sense again. Maybe your savings accounts have higher yield options available. Maybe borrowing costs have shifted in a way that affects your cash flow strategy. So spring is a great time to check in and see where the rate changes can strengthen your plan. Question 5, is my portfolio properly balanced with the right level of risk? So once your savings, tax strategy, and structural planning are in place, it's time to look at your investments. Is your portfolio aligned with your risk capacity, your goals, and your time horizon? Has your comfort level changed? Has the market moved enough that a rebalance makes sense? So this quick spring review can help ensure your portfolio is working with you and not against you. And finally, question number 6, are there opportunities or risk I might be overlooking? And that's the classic question. What did I miss? And it belongs last for a reason. So once you've reviewed savings, gaps, taxes, interest rates, and risk, you're in the perfect position to identify anything else that deserves your attention. Your advisor may see opportunities you haven't considered or risks that aren't obvious yet. So this is where experience and perspective really pay off. So just remember, financial planning isn't a one-year activity, it's an ongoing process. And spring is a natural reminder to pause, review, and refresh a little bit. So these 6 questions can help you re-engage with your plan, stay intentional, and make sure you're not just on track, but optimizing the year ahead. So if you haven't had this conversation yet, now's the perfect time to start. That'll wrap up our segments for today. Enjoy your week, everyone. Until next week, we'll see you then. Thank you. Bye bye.